We are live.
All right. Hello, everyone. Welcome to our October 14th, 2022 edition of This Week in Crypto. I'm your host, Brian, and I'm joined today by a crypto enthusiast, Clay, who has been following Santiment's content for quite some time. Clay, it's great to have you here today.
Thanks, man. I'm excited to be here.
Yeah, I'm excited to have you as well. Clay is a fundamentalist, really follows the news closely in terms of what is causing the ebbs and flows happening in crypto at any given time. And just as we did last week, we always love having people to provide extra context for why the metrics are looking the way they're looking. And obviously yesterday, Clay, was a pretty huge day as far as crypto and equities were concerned with the data released on CPI and PPI information here in the US. Obviously, it was kind of a mixed signal. CPI was a little bit concerning with inflation still high, but PPI actually let out information that exceeded investor expectations. So kind of a mixed bag there, don't you think?
Yeah, but something that I've been studying about that actually is that the CPI trails the PPI data by about 2 months. And so what we're seeing is like what PPI was showing a couple of months ago is reflecting in the CPI today. And it is kind of interesting to watch that play out.
Yeah, I mean, we definitely saw that the likely outcome from these reports is that there's going to be another 75 BPS rise, which is very relevant to crypto. We've seen for quite some time that Bitcoin, Ethereum, the S&P 500, they're all fluctuating in tandem right now, albeit, Bitcoin and Ethereum are on a larger volatility scale. But all things considered, it was about what was expected, and there was an initial plunge, but then a very quick rise, which perhaps surprised a lot of people because many, including some in your circle, Clay, they were actually shorting the markets and expecting that prices were going to continue to plunge, and that's what happened initially. But then this pretty remarkable turnaround happened, and prices actually ended up just slightly where they were before the data was announced.
Yeah, well, I mean, there were projections that came out a little early, and people saw those and immediately got scared and fearful. And that's what we saw with the sell-off. That was retail that was selling off, I think. And whales were immediately there to scoop up the liquidity because they've been trying to keep Bitcoin at a certain range for the past 4 months. And as soon as that sell-off happened, it immediately got bought up. And that's exactly what we saw yesterday.
Right. Yeah. And the big question is why? Why are the whales so intent on keeping prices at this range? For those who were in crypto back in 2018 and 19, after the initial plunge from the then all-time high of like 19.8K Bitcoin in December 2017. 2018 and 19 were full of a lot of lulls in crypto prices. I remember Bitcoin was sitting around 6,000 to 6,500 for like 4 or 5 months straight, and a lot of people were getting bored, and it became kind of a snooze fest. And once people got bored and started dropping out, things were able to then rise. And the question is whether we're seeing some parallels on, this part of the cycle compared to what we saw 4 years ago. And if that is the case, are they still benefiting? Are whales using volatility bots where they're still profiting off of the sideways action? Are they, following the occasional pumps that are occurring? For the last week, we saw, of course, Quant and Huobi tokens still gain significant market cap. Are they just jumping in and out of assets like that? It's really hard to say. I'm curious if you have any thoughts as to what the whales' intentions are here.
I think that in order to keep the market relevant, they have to keep the market at a certain range, to be honest. There's a lot of psychological barriers there that if you look throughout history, Bitcoin has never really dropped below the previous lows in the previous cycles. And I think that, there are a lot of people that are leveraged right now that don't want Bitcoin to drop below a certain point. Like,
Right.
look at Michael Saylor's company, MicroStrategy. Bitcoin can't drop below a certain number. I don't remember exactly what number it is, but I think it's around 16,000. If it drops below that, then they get liquidated by a large margin. So they specifically can't let it drop below that point. And then there's also that psychological barrier that I was talking about, that if it were to drop below previous lows, then we would see a huge market sell-off just because of the sentiment that would create.
Right. Yeah, and when you refer to previous lows, in this case, we're talking about multi-year timeframes. We'll go back to 2017 here on Sandbase, and we can look at the price action here under our volume chart really quick. So what Clay's referring to is, I presume this one here in June, right, where we got to about 17.5, 17.6K, and we're currently sitting at about 19.
Exactly.
Yeah, so that would be kind of the ultimate support level, where if we somehow fell below that, if there was a further crash, we'd see some serious bleeding where we could end up going all the way back to the low before that occurred back in September and October of 2020, which was just above 10K, around 10.5. So that's from my understanding, that's how a lot of TA traders are looking at it right now. As far as support and resistance levels go, you know, this little, if I zoom in here, this huge drop that occurred in June on the tail end of that early summer CPI report that really caused a lot of panic in equities and crypto. If we somehow fall below that, we're in big trouble for at least the temporary. And people can see a lot of bleeding before things recover, and weak hands would probably be dropping out pretty rapidly. At that point, you'd see sentiment just get extremely negative to a point we may not have seen for the last 5 years.
Yeah, I completely agree. A lot of trading has to do with psychology, and whales are some of the most calm people you'll ever meet, because when the market is turbulent, they have steady hands. It's the retail investors that really strike up the most worry and cause these giant fluctuations that we see.
Absolutely. It's probably a bit more calming for people who have been through the ringer over multiple years and know that their big moves can actually shape where markets go next. So it requires them to be a bit patient and calm so that they don't pull the trigger too quickly.
Yeah, I mean, the biggest holdings that I've had that have made me the most money have been ones that I've held for more than 5 years in the crypto market. And so you really do have to I hate talking about retail like, they're these nervous wrecks, but I remember back whenever I first got started in this market, I was that way, Mm-hmm. I was staring at the charts every single day, every minute of every day, pulling up my Blockfolio app. I don't even think Blockfolio is a thing anymore. I think it's now the FTX app.
FTX, yep.
Yeah. But yeah, I would pull it up and, look at the numbers all the time. And I've gotten to a point where I just, I look at it in the morning and then I move on with the rest of my day.
Yeah, exactly. And that really leads to the mantra of many investors, no matter what sector you're in, which is time in the market always exceeds timing on your trades, essentially. So what is the word? Time in the market exceeds timing of the market. And that's really true. I mean, if you've been in there for 5+ years, it's going to be a lot easier to digest a lot of these ebbs and flows compared to people who precisely are putting the pressure on themselves to buy at the bottom, sell at the top, make sure to take the exact amount of profit to match their risk tolerance. It's very stressful until you've kind of allowed prices to just do their thing for a while, and you've seen the lows and highs within your own portfolio. Now, as far as some of the big news stories that have been happening, Clay and I talked a little before the call here, and I think there's 3 fascinating stories that we can talk about here. The first being stablecoin tether traders, stablecoin tether trades, commercial paper holdings for the US Treasuries. And you were reading about this a little more than I was beforehand, Clay, but maybe you could give us a quick synopsis on what you're seeing here for the top stablecoin in the world.
Yeah, so this is really good news for the entire cryptocurrency market because currently Tether holds a lot of paper-backed assets, which basically means that it's a lot more speculative than what a stable coin should have in its reserves. Mm-hmm. With a stable coin, you really want something that will back the currency on a 1-to-1 ratio. And having paper assets is not the best strategy for something like Tether, being the largest stablecoin in the world. So they've made the announcement that by the end of this year, they are going to get rid of all of their paper holdings and move into more stable assets, which is very, very good news.
That certainly is good news. I mean, anything that strengthens the confidence we can have in Tether can be a good thing. And we can talk about, Tether's supply distribution and how things might be changing as a result of this news. I would imagine that over these next few weeks, we might start to see some anomalies. But really quick, while we're on the subject, I can bring up exactly what's been going on with Tether. And we can see this pink line here that represents the holders that have between $100,000 and $10 million in Tether. And they have been accumulating going all the way back to the first week of August. So we're talking about 9 to 10 weeks now where they have accumulated. And if I shift over, try that again. We can see that they've added, these shark and whale addresses have added about 1.26% of the supply in the past 9 to 10 weeks, and about 4.5% of their total holdings since early August. So that's pretty significant, and it shows that they've been indicating some increased confidence for quite a while after the huge plummet following the Terra USD scandal and Tether getting depegged down to 95 cents temporarily. But things, as far as the smoke, it might finally be clearing a little bit for Tether.
Yeah, I mean, it's needed. It's absolutely needed. They have been marked for the past probably 6 years.
The majority of its existence, yeah.
Yeah, that they do things behind closed doors. They're not very transparent with their holdings, and people have been fearful for years that they might become insolvent. And so this is very, very good news altogether.
Yeah, there's been an argument for a while that the lack of confidence in Tether, the number one stablecoin in crypto, has been suppressing all of crypto for quite some time because it's the top trading pair that fluctuates with actual dollar amounts. And without 100% confidence in those dollars staying afloat, it's difficult for people to be able to trade in and out of crypto the way they would otherwise feel comfortable doing.
Yeah, I mean, personally, I've only traded in and out of USDC, I've only traded in and out of USDC whenever I'm holding for longer periods of time. But I only use USDT whenever I'm placing like a very quick trade between one asset and another. I never stay in USDT because that is something that I have been fearful of for years. And this kind of supplies me with a little bit more confidence.
Absolutely. Absolutely. It makes it a little more digestible to leave some of your assets in USDT if that's necessary when you're taking profits but don't want to transfer out to fiat. So really cool to see there. I think it's a great story. And yeah, we can move on to the next one here, which is the XRP lawsuit, which is something that's been on traders' minds for about 3 months or so now, and it has actually been kind of working in XRP's favor, as a lot of XRP enthusiasts have expected that the SEC would be able to settle with them. And I think it had a very good September where it went up about 50%, in large part due to this lawsuit. But what's the latest that this article is telling us?
So the judge has actually approved the request to file for an amicus brief, which is basically two companies have said that they are going to stand with Ripple Labs and say that what they're building is not only not a security, but it's also needed for their companies to thrive. And so they're standing with XRP, and they want to be able to add that to the evidence of this hearing. And the SEC tried to shoot that down, but the judge has ruled in favor of Ripple Labs on this. And so this is a huge victory for XRP, and that's why we're seeing the sentiment grow for XRP. People are going out and buying it up. And then on top of that, the Heinemann documents that have been kept like behind closed doors and wrapped and sealed are going to get presented as well in this court case, where he basically said that Ethereum and assets like Ethereum are not securities. Mm-hmm. And the reason that that's important is because he was doing dealings with the Ethereum Enterprise Alliance while still being a chairman for the SEC. And so a lot of people have made like this whole quote unquote ETHgate thing more than probably what it should be. We should just be saying, okay, if Ethereum is not a security, then XRP shouldn't be labeled a security either, and leave it at that. But people are trying to attack one crypto or another, and I don't think that's the way we should be going about this. We should just be saying, okay, this is the precedent that was set. Let's move forward with that precedent.
Mm-hmm. That makes a lot of sense. It's certainly a victory with XRP kind of being in the forefront, but it isn't just XRP that is being impacted. It's Ethereum. It's so many top caps and almost all non-Bitcoin assets really are going to see a benefit from this ruling, assuming that there's no appeal and it really is able to play out this way. And we can see here on our charts just how positive the sentiment for XRP has been since around mid-September, right when things started to rise. And, you know, we saw a little bit of a local top here, but prices for the most part are staying quite high, close to 50 cents, despite 4 straight weeks of somewhat euphoric sentiment. So this might just go above and beyond a normal, inorganic, euphoric sentiment week that we've seen in the past. And that's why prices are able to stay high as people wait on the finalization of this news.
Yeah, I mean, I'm a big fan of looking at trends. And if you go on social media platforms right now, like YouTube, Twitter, TikTok, XRP is one of the most talked about assets right now on all of those platforms. People are really stepping out and above and beyond what other people are talking about with other digital assets at the moment. And it's kind of interesting to see, because going back a few years, nobody really wanted to touch XRP because it was more of a centralized asset. But honestly, at this point in this juncture, like, we need XRP to win this lawsuit in order for the rest of the cryptocurrency market to be able to take off. Because if XRP gets labeled as a security, then that will set a terrible precedent for the rest of the market.
Yep, almost everything else. And it's funny how much, we've heard polarizing opinions of XRP prior to this lawsuit, how it's a very centralized asset, kind of a shill coin, something that the crypto bros are into, but serious investors don't take seriously. And now all of a sudden, so many assets in the crypto sphere are reliant on the outcome of this lawsuit, as you said. So it's going to be very exciting to see.
Absolutely.
And a final topic before we start getting into some of these metrics and the nitty gritty. We have this article here that you dropped before the call about the US stock futures and how they're plunging, how they did plunge in September as the September CPI came out. And then, of course, they recovered right afterwards. But what does this Market Watch article tell us?
Yeah, I mean, it's basically telling us just that. The stock market responded exactly the way the cryptocurrency market did. And taking it a step further, interest rates on mortgages actually rose again. In fact, you can see it right there. There's another article right there. Mortgage rates hit 6.92%, the highest in 20 years. So the CPI data had major effects on every market yesterday. And that's what I wanted to point out, that it wasn't just a cryptocurrency market thing that happened yesterday. The stock market fell just as much as the crypto market did. And yet there were capital investors out there ready and willing to pick up those cheap prices in that market too. So it's interesting to see the parallels of these markets, and that's what I really wanted to point out.
Yeah, and a lot of people are pointing to Bitcoin and crypto in general right now as essentially fluctuating like a large volatility tech stock right now. And to an extent, that's true. We've shared this chart on previous calls, but if we head to the comparison between Bitcoin's price and the S&P right now, we can see quite clearly that the relationship is very close. There's a very tight correlation between Bitcoin and the S&P that we don't normally see. This is just the past 6 months. If we go to like the last year here, you can see it really started to connect in late January. So we saw this big drop down the third week of January, and ever since, you can see how close this blue line kind of fluctuated. Here in June, you saw a big recovery by the S&P, while Bitcoin didn't, but then the S&P came all the way back down, and Bitcoin hasn't really moved so much, which is interesting. But keep in mind, this is all relative. So, when you see like Bitcoin go up like this and the S&P go up like this is actually a much greater percentage gain for Bitcoin than it was for the S&P, and vice versa when it dropped back down. So there's still a lot more volatility, but it's been interesting since June, these last 4 months. Relatively speaking, Bitcoin isn't moving nearly as much as it was, while S&P has had a lot more volatility than usual. And that's kind of a rare pattern.
Yeah, no, I definitely think that Bitcoin is starting to find its way in the market as separate from the economy that it was built around. Like, I mean, the United States has been one of the largest governments or entities that have purchased up Bitcoin over the past 10 years. But people around the globe are really starting to see that this asset can be a game changer, I think. And I think over the next 6 to 12 months, we're going to be in for more hurt on a macroeconomic level. Just because if you look over at Europe with the whole energy crisis that's going on, here in the United States, we're probably about to be in for a rude awakening as well, because we've started dipping into our reserves. All of this is going to have a huge macroeconomic shift that is going to cause a huge downturn, I believe. And with that, people are going to be looking for assets to be a hedge. And so people are going to be buying up gold. I think you had gold in that previous chart that you were just showing.
Yep.
People are going to be looking for stocks that are stable. People are going to be looking to buy up precious metals. And then hopefully Bitcoin will do what Satoshi intended and become that hedge against governments that make poor economic decisions. The ramifications of printing trillions of dollars over the past couple of years during this time is going to have an everlasting effect on the macro economy. And so hopefully what we see here in the next 6 to 12 months is Bitcoin becomes more stable and people are buying into it to become that hedge against shady bankers and terrible economic decisions made by governments.
Mm-hmm. Yeah, I agree with everything you said, and I think these next 12 months will be very telling as to whether the Fed's plan and just the world's overall handling of their own individual finances are going to play out the way they're intending or not. I think gold, silver, precious metals in general, they're very intriguing right now. You can see gold has really plummeted since March when it temporarily spiked to enormous rates that we hadn't seen in years. And now gold and silver are just plummeting, even more so than the S&P and Bitcoin right now. But with the dollar continuing to climb here in the US, that's kind of the thing that a lot of people's eyes are going to be on. If the dollar starts to drop, that's when gold and silver are going to be very intriguing, especially if the S&P and Bitcoin don't pop as soon as the dollar finally surrenders to its huge ascension that it's been on for the past year. I think the dollar's at something around a 20-year high or something right now in terms of value.
Yeah, but it's all just a sham. I mean, something that I like to tell my audience is that the dollar is not going up in value. It's just dropping slower than the British pound and the euro.
Which makes it, as a result, the ratio is going up, and that's why the dollar's value is rising.
Right.
But in general, monetary value or fiat monetary value in general is dropping as a whole.
Absolutely. And the CPI data tells us that.
Right.
When we go to the grocery store, or we go to the gas pump and we have to spend extra on those things, then it tells us that the value of the US dollar has gone down.
Right. We're able to buy less with the same amount of dollars that we had before. The same amount of whatever currency. It's universal around the world right now.
Exactly. So the chart showing that the US dollar is going up against other assets is really meaningless at this point.
Mm-hmm. Yeah, that's a really, really good lesson. And of course, very relevant to crypto right now, because crypto, through its history, has had moments. The last one I can really think of was 2017, where it was being proclaimed as the ultimate hedge against fiat currency. We heard that a little bit in 2020 and 2021, but the reality was those past couple of years, it was mostly crypto was getting closer and closer to being correlated with the S&P. But 2017, it was off on its own planet, and prices were fluctuating in a completely independent manner from the S&P. And that's what most of us here on this call are hoping to see in 2023 and 2024 and beyond.
Yeah, I started noticing a direct correlation, I think around 2020, is whenever I really started to notice the S&P and Bitcoin start moving in tandem.
Right around Black Thursday, the collapse, right? We started to see, I mean, the S&P was kind of just going up. And right here, this is where we saw the big collapse in May while the S&P continued to rise, interestingly. But then, eventually it just clicked and came right back to where the S&P had been growing before they really started to collapse together very tightly in 2022 here. Sorry to interrupt. Go ahead, Clay.
No, that's exactly what I was going to say. So yeah, you're spot on.
Yeah. So, I mean, we're hoping to see that there's some separation soon, as we've back tested before at Santiment. Bitcoin and crypto tend to thrive best when there is zero reliance on equities markets in any way, whether that is equities going up and crypto going down, or equities going down and crypto going up, or equities being flat and crypto deciding to go up or down. What we want to see is some of the retail dropping out, the people who have overlap in exposure in the equities markets no longer making the same decisions in equities that they do in crypto and treating it like a tech stock. That's what's going to allow crypto to start to warm up again and get back to the kinds of exponential price growths that we've seen in the past. So definitely something to keep an eye on. And with that said, I can sort of transition now to some of our metrics that we normally go over for about 15, 20 minutes, and then we'll take the last 20 minutes to go over some of our chat's questions. And Clay, feel free to hang tight and we can go over some of these metrics together, because I'd love your opinions on some of the data we're seeing right now.
Sure.
So let me zoom in a little bit. Let's go to the last 6 months and check out what's been going on with transaction volume and trading volume. In white here is our normal trading volume for Bitcoin. Red is transaction volume in Bitcoin, and yellow is transaction volume in USD for Bitcoin. And for the most part, it's been a decline in transaction volume in terms of dollars going back to about early August. And this was pretty much the end of the Bitcoin, the temporary Bitcoin rally that had been going on for about a month and a half. And once we saw this transaction volume dry up, prices were plummeting again. We had one big spike here. This was the biggest transaction volume spike we'd seen since mid-June, and that marked the bottom. But very quickly, you saw that transaction volume started to make lower lows, and it's pretty low right now. We're pretty much back where we were in May, which is concerning. Trading volume looks arguably a bit better, but not much to say other than the fact that we're continuing to tread water as traders decide whether they can dip their toes back in at these levels yet. But we don't see anything too indicative of an anomaly here on the trading or transaction volume end. Now, as far as daily active addresses in circulation, we have these lines here as kind of a 30-day moving average to let us know exactly how much things are really moving up and down over a longer period of time. And we can see daily active addresses, the amount of unique addresses interacting on the Bitcoin network, it's stayed relatively flat for about 4 months now, ever since it had this decline going into June. And then meanwhile, I'll just take off daily active addresses. Circulation has been just on a continued decline going back to June itself. And we have this model here. I'll zoom in just a tiny bit. We can see for Bitcoin on this bearish to bullish scale, with red being bearish, green being bullish, we're seeing the third straight month of a bearish divergence going on right now as Bitcoin continues to struggle to get that amount of unique addresses interacting to start kicking back into gear again. We could even zoom into all the way back to 2020. And you can see when things really dropped off here in late June, early July. And right now the moving average is pretty much back to where it was in September of 2021, where yes, prices were significantly higher. But it's got to be concerning when you see so little circulation happening and more people dropping out of crypto right now because they've essentially given up. Now, at some point, all of the capitulation and the weak hands that are basically jumping out of crypto, that's going to be considered a good thing, especially when it's paired with extremely negative sentiment. For now, it's kind of more just a lack of discussion without the sentiment being extremely negative. So it's kind of a flat, slightly negative sentiment, but not like huge, fearful weighted sentiment bars, kind of like we saw in 2018 and 19 when we were getting close to bottoms there. But yeah, I'm curious on this one, Clay. What kind of event do you think would happen for Bitcoin and just crypto traders in general to essentially call for crypto to be dead and essentially give up in huge waves? Can you think of any scenario where that can happen?
I mean, I don't think that Bitcoin will ever are you talking about like the hypothetical Bitcoin is dead that has been restated over and over again?
Exactly. Like in terms of all the people that are doubting crypto now, what will really make it turn into kind of the mainstream thought for most traders out there?
I think if we continue to raise interest rates with the Fed, and the price of Bitcoin continues to fall beyond like those psychological barriers that we talked about in the beginning, then people are going to be able to point and say, hey, look, Bitcoin is dead.
Yes.
But beyond that, like I honestly believe that people are going to start waking up here soon to the fact that central bankers know just as little as we do, and that the monetary policy that they set in place is what has caused this entire downfall. So hopefully that's the narrative that plays out. But if we continue to see them raise interest rates to fight this inflation that they caused, then we could definitely see Bitcoin continue its spiral down.
Yeah, great point. I mean, that's really what we'll be keeping an eye on in terms of the overall perspective toward Bitcoin. There's still a little too many calls related to buying the dip right now, where we want those to go away. We want people to no longer believe that a big bounce back to 68K plus levels is possible. And that is exactly when the door will be open for prices to rebound. So it's something to keep a close eye on.
I think also too, like the talk of like NFTs that are just JPEGs, that still isn't at a level where I'm comfortable with saying, okay, people have realized that this was a really stupid trend. Like I think once investors, like serious investors, look at that and say, okay, we were foolish to invest in this, that's whenever we're really going to see a market bottom.
Yeah, that's interesting. I mean, people have polarizing opinions about NFTs. We, of course, have an actual NFT dashboard which indicates where the big buys and the big sells are happening. Let me make sure I can find it right here. If you go to dashboards, and then you click on NFT influencers transactions, and you give it just a moment, you'll see that you can see all the influencers and exactly what the big buys and sells are. And there's always trades going on, but they have started to dry up a little bit. Obviously, things like NFTs, DeFi in general, you start to see a lot more projects and interactions popping up when the markets are looking hot and there's a lot of optimism. And when that goes away, you see less and less huge transactions. Now, if we like sort on price, we can still see that there's like massive buys happening all the time. Go back to the first page. So yeah, like there's still like 333 ETH purchases of NFTs happening on CryptoPunks, 240, 115. These all happen in the last 10 days. But there's still, from what I've noticed, there's a little bit less than there used to be. You can even click on like CryptoPunks in general and just take a look at the NFT social volume over time and how much it dropped off starting in September.
Those were selling for millions of dollars, though.
Right.
And now they're selling for 300 to 400K. So that's a really good sign, in my opinion. All of these businesses that started up during the last bull cycle, we really need to see the terrible business models fail and just completely close up shop before, again, this goes back to the market bottom will happen whenever 99% of these projects fail. It's what we saw with ICOs in 2017 and 2018. It is a good thing to talk about businesses failing that have a bad business model. A lot of people get a little bit worried about talking about that kind of stuff, but it's a good thing for businesses to fail that have bad business models. You don't want them in your market. So yeah, this is an awesome metric, man. I really like that chart.
The NFT social volume, yeah. And you can look this up for basically any main NFT contract. I won't look up like 5 right now or anything, but the vast majority of them look a lot like this. Maybe they didn't even have this big spike in August like CryptoPunks did, but you'll see that like going back to 2021, especially, depending on the project, there were a lot that were seeing spikes around here and then just had gradual drops as time went on. Because no one's that interested in crypto, no matter what the sector is right now, compared to how interested they were when we were breaking all-time high records all over the place a year ago.
Dude, that's an awesome chart.
Yeah, it's really fun to explore. And obviously, all of our pro members can just freely look up any contract address anytime they want. And of course, find, where the big purchases are coming. And what the NFT collection name is, even who the NFT influencer is. We can just click on Vincent Van Doe, fantastic name, and quickly see exactly what he's tweeting about. It's all just connected right there. So it's very convenient for people. And yeah, that discussion you had about how 99% of projects need to fail, that brings us to a chart I was going to show about the overall dominance of Bitcoin's discussions right now. This is the last, well, we're a little too zoomed out. Let's go to the last year. We'll just take off social volume and only look at the dominance for Bitcoin over the past year. And generally, I just posted about this yesterday. We like to look at a line around 20%. And when the dominance is above there, it's generally a healthy amount of discussion and focus from traders on the number one asset in crypto that allows crypto to essentially grow. And without Bitcoin being able to thrive, all other projects, even 14 years into Bitcoin's existence, all other projects are going to fail So that's why it's so important for the focus to stay somewhat on Bitcoin, no matter how greedy people are getting toward altcoins, because when Bitcoin falls below, you'll notice there's a coinciding with price drops. I'll even break out the emojis for this one. So you can see here, the one rocket ship emoji was really happening here when Bitcoin's dominance was above 20%. And perhaps we can say right here, right before it dropped in late October. And coincidentally, this is when a lot of whales started to dump, like right at this top. They started to dump. And yes, we made one more higher high the second week of November before falling off a cliff. But you can notice that social dominance was already looking like this by the time this all-time high happened. And it just continued to be low here and, you know, way down here, for example, even when we had a short-term bounce, look at how low the social dominance was. That was not a good sign. And vice versa. You can really see that ever since early August, social dominance has continued to drop and drop. And it's actually only being discussed at about 10% among the top 100 assets in crypto. That's how this metric is measured. And being so low, it has to be concerning that too much focus is on the SH you-know-what coins and not enough on the coins that actually allow crypto to thrive long term. So we always look at this as a pretty fascinating and telling long-term indicator for all of crypto. And what we really need to see is social dominance start to pop back up around the 20% mark, which is an arbitrary number, but historically it's been a pretty accurate level for Bitcoin to stay around. We can go like 2 years back and see a little more proof. So like right here, for example, this was maybe 5-6 months after Black Thursday happened. And look at all these huge social dominance spikes, talking a ton about Bitcoin. It was being like discussed at almost half the amount of overall discussions back in early 2021. And then right around here, you know, it started to eke below 20%. And you can see how Bitcoin started to flatten out and then drop back down. And it's pretty good at predicting where prices go next, based on how high or how low the discussion rate is. So I definitely recommend to our users to check out the social dominance going on for Bitcoin at their discretion. Now, we already talked about weighted sentiments a little bit. This is an interesting spike going on right here, by the way, guys. I don't know if it'll last. I think that part of this is related to the CPI and PPI data that came out yesterday, and a lot of people shifted their focus back to Bitcoin, as they often do when big FOMC decisions are coming out, or inflation/recession talk in general, and how it relates to crypto, which ultimately makes people talk about Bitcoin specifically. But for the most part, you can see that it's been a predominantly pretty negative sentiment throughout the past year, with a few anomalies going on in between. But I would expect as this week progresses, the ratio of positive versus negative comments comes back down to earth, and we may end up around, you know, something a little more like this, maybe even get back into negative range, depending on whether prices drop off a cliff, and we may, you know, go back down below 18.5K again, or even below 18K. That would be a cause for a lot of traders to suddenly turn negative again. Moving back up to a few other important metrics, MVRV is one I wanted to take a look at. Zoom back into the last 6 months. And as far as the 30-day MVRV goes, we're pretty much right at neutral. The average trading returns is about plus 1% for the 30-day active addresses, whereas the 365-day MVRV continues to stay low. Now, keep in mind, it's starting to show a little bit of a rise, and that's just because we're going back 1 year. So eventually, with it being almost a 1-year drop now since the all-time high, even if prices stay flat, the average trading returns are going to start not being so negative because prices have been dropping for so long. So we don't want to see that. We want to see that the 365-day MVRV stays very low so that there has to eventually be a pop to get the long-term MVRV back to zero, where all of MVRV tends to fluctuate over time, regardless of the time frame. So midterm, we're pretty much as neutral as it gets. Long term, it is still far less risky historically to be in Bitcoin right now compared to the average time. So keep that in mind. Funding rate, let's move up to the last week here. And take a look at this, guys. So this is right when the CPI and PPI data came out, and we saw that prices jumped off a cliff here my morning Pacific time, as stock markets were opening. And eventually we saw this big short bar, a lot of people betting against the markets. And right when that happened, boom, that marked the bottom. And we started to see a whole bunch of liquidations until people started going long again. And once they went super long and just completely changed their mind and started betting in favor of the markets, that's when we saw the local top and things came back down. So this is a great illustration of how markets tend to move in the opposite direction of crowd expectation. And until traders are essentially not trading out of emotion and just following the direction of the markets, we're going to continue to see these big extremes where it's almost a self-fulfilling prophecy, and shorters basically cause the markets to stop falling and longers cause the markets to stop rising. So I think that's really interesting. And you do a little bit of longing and shorting yourself, Clay. I'm curious, what kind of goes into your thought process when you do open up a short or a long? I know about the decision you made based on the early data that came out, and you were already anticipating the drop right around here, right?
Yeah, so I actually opened up my short last week whenever Bitcoin was above 20K. Mm-hmm. And I kind of waited until this week to see how the market was going to play out. And my sentiment, based on the fundamental analysis, was kind of assured whenever the PPI data came in. It was still higher than what was expected, even though it was better news than some people were anticipating. And because of that, I knew that the CPI data was going to come in high. And retail investors were going to be sparked by that data. So I kept my short open after reading about the PPI data, and I closed my short at about 18.5 and then opened up a long, and I closed that at about 19.4 yesterday. Wow. And so I profited over 10% in roughly just a week's time frame from using leverage. And I don't encourage anybody to use leverage unless they are very sure of their conviction on a certain trade, because anybody could have placed that trade without using leverage. I just was so sure of that I decided to open up that leverage position and short the market.
Mm-hmm. Yeah, that's very interesting, Clay, and congrats on your foresight to make these trades, as it's never easy to short the markets for an asset that has gone up as much as Bitcoin has over the last decade. But I didn't mention at the beginning of the call like I usually do, but anything we talk about here is, of course, not investment advice. We're here to kind of show what the divergences are showing and give context as to what usually happens with prices when these divergences happen. But in Clay's situation, leverage trading, it worked out for him. Understand that there are also a lot of people who get really burned, especially when they're adding leverage to their trades. It creates very tight windows in the possibility of getting liquidated if things don't go your way. So keep that in mind. And obviously, when it comes to unique 1 or 2 time per year situations like yesterday was presenting, you can make some advantageous decisions that go your way. Just be very careful with doing so. Now, another thing to keep an eye on are whale transactions, which have been pretty dormant for Bitcoin. Going back to mid-June when we had this sudden spike and that marked at the bottom, we can see that over time, the 100K plus and $1 million plus transactions have continued to slide over time. That's not necessarily a bad thing. We simply don't want to see big whale transaction spikes happen as prices are rising, as that usually implies there's going to be a direction change. Whatever direction prices are going when these spikes happen, usually the opposite direction occurs thereafter. We saw a mini occurrence of that in mid-May when prices did climb after this spike, and then on a much larger scale in mid-June. And then eventually the rally petered out for other various reasons. But we can also compare what the whale transactions are doing with how the key whales are behaving. And this is kind of the meat of our presentation for a lot of people, because we can see exactly how the top key stakeholders are behaving at any given time. Let me overlay price on here just to give some added context. Make that a nice little bar graph, darken it a bit. Okay. So looking at the last year, I mentioned, Clay, that right around late October is when people started to drop their holdings that they had been accumulating in the year prior. I'll even make it easy. I'll combine the 100 to 1,000 and 1,000 to 10,000 Bitcoin addresses, so we don't need these other lines. We'll even look at the last 2 years and check out how closely Bitcoin's price follows what these whales are doing. You can see that they were accumulating huge here until early April and then had a big dump. And then after prices, whoops, didn't mean to highlight that. So after prices dropped, they immediately started accumulating again here in mid-May. And yes, prices did drop a little more, but eventually the whales got their way and prices popped, had a little bit of a fluctuation here. You can see that price literally just followed what the whales did right there before accumulating all the way up until late October 2021, a little after that first all-time high. Then they made this big drop. The final all-time high happened, but you can see that after that all-time high happened, the whales were already dropping out. So a lot of that liquidity was already being pulled from Bitcoin's exchanges, and there was less and less tokens circulating. And eventually we fell all the way down to 45.7%, got actually as low as 45.6 here in late September, before we finally saw at least a decent accumulation bounce, but it's starting to drop again, which is unfortunate. We were talking about last week how this could be the start of finally some good accumulation from these key whales. But for now, it's staying pretty flat, and we have to be a bit discouraged about, just this past week, going from basically the past 10 days or so, where it was at 45.84% held, all the way down to 45.72%. So 0.12% of the supply is gone again, and we can look at that in absolute terms here, verging 100 all the way up to 10,000 again. And if we look at October 4th until now, these key whales have dropped about 17.6 thousand Bitcoin, which is a whole lot of money, I think tens of millions of dollars. So keep that in mind. It's going to be very important to watch how these whales act these final months of the year, so that we can go into 2023 and have an idea of whether whales are actually encouraged by what's to come, in the upcoming year, or whether they're expecting more of the same.
Can this go all the way back to 2017?
Oh yeah. So if we go back to 17,
I'd like to see what whales were doing at the end of 2017 compared to what they're doing now.
Yeah, so it was quite interesting. They were actually selling beginning in August of 2017. And even though we had a huge rise from August until December, the whales were not believers at that time. And they just continued to sell all the way up until September 2018. We had a final drop off here. And right when that drop off happened, this is where all the accumulation started. So it was really November 2018 where a lot of our current whales got super wealthy because they invested a ton in the low 4,000s about 4 years ago. And since that time, you know, when they were holding about 42% and now hold 45.8%, the price of Bitcoin has gone up about 365%. And in total, this group accumulated about 1.44 million Bitcoin.
So roughly 2 years before the last Bitcoin halving is whenever they really started accumulating.
Yeah, that's a good way of looking at it.
And where are we at right now, according to the next Bitcoin halving? We're right around that mark, I believe.
It's a good point. Good point. Yeah, it was. So it would be, if history were to repeat itself, which is a big if, then about a month from now, we could expect some form of accumulation. I would not suspect it would be quite at this scale, but if they are anticipating a similar performance from the next Bitcoin halving, then right around the end of 2022 would be the opportunity to repeat what they did in the end of 2018.
I'll be keeping a close eye on that for sure.
Yeah, that's a great point, Clay. I do think that the whales have eyes on the halving at all times, knowing just how far away it is, when the key times to begin accumulating and dumping are, because it's undoubtable that these halvings have a dramatic impact on price, no matter what kind of sentiment or news stories are coming out about crypto at that time. Now we're about three or 4 minutes after the hour now, and I want to make sure that we have a dedicated 10 to 15 minutes to answer a few of our audience's questions, particularly if you guys have a few assets you'd like us to look into. Gary, if we have any user requests, please let me know. Otherwise, you know, we can look at a few ourselves. Even you, Gary, if you have a suggestion on one we might want to keep an eye on, because I know that you've been working on some articles in the background over the past few weeks.
Yeah, Brian, we have Cardano requested in our chat.
Perfect. Always a popular asset. Cardano has had a pretty brutal year, even compared to other assets. So it's definitely worth checking out to see if there might be some turnaround signs. If we start here with transaction volume and trading volume, we'll zoom back into the last 6 months. That's interesting. I think we might have like a data cutoff here at the end of September where we lost transaction volume, but we do at least see the trading volume has picked up some. We had a bit of a spike here just yesterday, and today's looking pretty neutral. But if this is the start of a bit of a rise, that would be encouraging to see. The last time we saw a huge rise was really here, and these were both price bottoms. So if trading volume suddenly picked up right as prices were bottoming out, that would be encouraging to see. Circulation, yeah, we have that same cutoff. That's unfortunate. Sorry for not being able to show you guys what's going on there.
I think it was kind of a sell the news kind of event, though. The Vassal hard fork came in just this past month, and so people were definitely selling on that news.
Yeah, I think so too. Cardano has had a lot of sell-offs throughout the year, but particularly in the last month, I saw a lot of negative sentiment coming out around that hard fork.
But it's kind of interesting because it's one of the biggest hard forks that they've had, with like some of the best upgrades to the network itself. So if people are actually trading based on belief in the network, then there's definitely going to be some accumulation here.
I would agree. And especially with this amount of trader pain, where unlike Bitcoin, remember we saw that the 30-day MVRV is at plus 1%. Cardano's is at about negative 17%. So we've talked about that negative 15% level, right around there, as being kind of the level in which when things fall below, you tend to have price bottoms happen. You can see it illustrated very well here in late May and in mid-May, the two times it went below. We saw pretty decent price bounces both times. So we are below, and this just happened in the last couple of days. So historically, this should reasonably be considered one of the best opportunities to be in Cardano since late May, based on midterm trader pain. And with long-term trader pain, I'm going to have to make the axis just a little bit larger just to show the bottom. So the 365-day trading returns for Cardano sit at negative 55%. Now, historically, it's at least as low as it's been since July, and you saw a price bottom occur right here. And then going back, you can see it got below negative 60% just twice here in May. And of course, both times we saw big bounces right after, because they were coinciding with the 30-day MVRVs being way below negative 15%. So yeah, we're in a very opportune time for both the midterm and long-term trading perspectives. It doesn't guarantee that prices are going to just bounce, but all things considered, based on history, these are the kinds of opportunities where you can feel you are in an asset at a much less risky time than usual. As far as funding rate goes, let's see if there's been any anomalies here. I do see a big negative spike happen on the 12th, interestingly. I don't know what this would be related to, but it does look like there were some shorts happening, and most of those shorts were successful. And normally we'll see a big anomaly like this, and then prices rise, causing the short liquidations. But this time there wasn't really any rise, and shorts basically continued throughout the 12th and the early part of the 13th, going into the PPI and CPI data coming out. And then eventually some liquidations happened. Go ahead, Clay.
I think that was honestly based on the infighting with Cardano's founder, Charles Hoskinson, and the XRP community. Over the past few days, there has been a lot of back and forth from those two communities, and I wouldn't doubt it if the XRP army opened up a bunch of shorts.
That makes a lot of sense, and it's interesting how that kind of infighting can cause a lot of people to bet against the asset. And it's, like I said, it's quite rare for this level of shorts to happen and be correct. Historically, if I zoom out a little on the bottom of that funding rate, and I go back to like the last 3 months, yeah, this was the largest short ratio we've seen for Cardano. At least in the last 3 months, yeah, about since June. And when we saw that big short spike in June, prices immediately bounced. And that's normally what happens. But this time around, prices did actually continue to go down for a short period of time. And that's interesting to see. We'll see if there's more infighting that causes another big leg down in the perpetual contract funding rate for Cardano, which might present some more predictable opportunities. We do see a cutoff on whale transaction count. Yeah, I don't know what happened here on the 21st. And Gary, maybe you can take a note on this, but it looks like we've had a data outage on the on-chain side for about 3.5 weeks on our Cardano blockchain API.
Yeah, right. Sorry about
Sadly,
that.
yeah. No, not your fault or anything. I think we just have to address this because Cardano is one of our more read about and analyzed assets on our platform. So we want to make sure to correct that. But yeah, it looks like for the most part, a lot of our on-chain data is offline for the moment. So sorry, I can't expand too much on what's been going on. But we do have social dominance showing that Cardano is really, really being ignored right now. It's pretty much at its lowest percentage of discussions among top 100 assets of the year. If we go back to like, and yeah, look at this just downward fade in interest toward Cardano as time has gone on. Ever since the huge spike in August, this was its all-time high here, up around a little above $3. And we had a huge drop in discussion rate the following 4 to 6 months or so. One big spike here that didn't really impact price too much, and it's just been fading ever since. And like I said, Cardano has been one of the most disappointing top cap assets in 2022 without really any major decouplings from Bitcoin at all. And that's what's caused its price to drop back down to about 38 cents, which is its lowest since February 2021. And as far as weighted sentiment goes, it is in the negative range, which is good to see. We are starting this week with a pretty low negative sentiment, the lowest it has been since July. So about a 3-month negative sentiment low, which is a good thing. We tend to see the bounces occur when sentiment is extremely FUD-centric. Obviously, the last year has not been kind to Cardano. So even when it has been negative, you don't see a lot of bounces like this. But at the very least, what we want to avoid are the big euphoric spikes where it leads to the price tops in the weeks following. That's why this metric is such a powerful alpha tool, is it's not just a lag indicator by any means. It will predict what's going to happen the week or two after in most cases. So you have time to react when everyone else is euphoric and when everyone else is showing severe FUD.
So this would show that now might potentially be a good buying opportunity then, is what this is showing?
Better than average, yeah. I mean, as I said, there's been a lot of price drops even with Cardano being negative, and that's why it sort of relates to what's going on with Bitcoin. So if like Bitcoin is also showing extreme negativity, which right now it's having a huge anomalous positive spike, but for the most part, Bitcoin has been pretty negative since late June, and that's at least allowed Bitcoin to stop the bleeding because there's already so much FUD going on that it's very hard for prices to continue to go down when the mainstream audience also believes that the price is just going to keep bleeding. But if Bitcoin starts getting into an extreme negative sentiment along with Cardano, that's going to be a good recipe for prices to bounce. And Cardano would be one of the bigger beneficiaries because it is particularly negative compared to most other assets right now. Hopefully that makes sense.
Yeah, man, great to know.
And then finally, development activity. It's continuing to look pretty good for Cardano. It's a top 5 developed asset right now, according to its GitHub and the amount of notable submissions happening on its network. Of course, for those who don't know, we exclude things like simple Slack comments and things that sometimes show up as a GitHub submission. And we only include things that are actually indicative of actual innovation for the asset. So for those thinking Cardano's dead, understand that there's still a team that is churning out anywhere between, I can switch to one day. Okay, so yeah, anywhere between 350 to 450 submissions per day on its basically its blockchain and its actual raw code, which would indicate that the people closest to Cardano still very much believe that this asset has value and can have a place in the crypto ecosystem down the road. And for those who want to see the top developed assets, if you click on the screener here, and you go to development activity in the last 30 days here, you'll see immediately which ones are getting the most GitHub submissions per day. Polkadot and Kusama, of course, share the same GitHub repository. Cardano is here in third. Status, which is a far lower market cap than most of the rest of these assets on this top 15 countdown, it's fourth with 336 or so submissions per day. Ethereum, Filecoin, Vega Protocol, another low cap asset, it's here in the top 10 just recently. Decentraland / Mana, Cosmos, Internet Computer, Elrond, IOTA, Flow, Chainlink, very popular, Hedera, Stellar, Audius, Uniswap, Solana, and Near Protocol rounds out our top 20. So keep that in mind. If you're a long-term investor and you want to be in the assets that are continuing to see plenty of innovation and attempts at improvement, this is a good way to go for some value investors out there. Any other comments or some quick questions I might be able to address in chat, Gary?
Not really.
Okay. All right. Well, I think we are at about that time, folks. It's been great going over plenty of the fundamental stories that have been ebbing and flowing the markets right now with you, Clay. I really do appreciate the insight, and I think we should do this again in one of the upcoming weeks if you're free.
Yeah, man, I enjoyed it. I really did, because taking a look at the TA on your side combined with some of the FA, I think creates a very round picture.
It does. It does. It's anyone who thinks that only TA or only FA or only, the NVT model on Santiment are all you need to be profitable. I think that's a bit foolish to think. It's best to do it in tandem with everything and all of the information at your fingertips so that you can kind of weigh how many of these stories are bullish versus bearish right now and kind of play a more probabilistic type of game rather than being ultimately always bullish or ultimately always bearish. Things do change a lot. And if we were really keeping tabs as traders on every piece of news and every bullish and bearish divergence that shows up on Santiment, you'd probably have a much better outcome on your returns. And that's ultimately why we're all here. So I hope this has been helpful. And I was telling Clay about this just yesterday, but we do have a referral link function for those who don't know. If you just go to your account settings and you go right here to create referral link, you'll see something pop up that you can basically add on to any Santiment chart or link that you share with the community that you're in. And when they click on it and they sign up with Sandbase Pro, even if it's just a trial, whenever they do make a payment, you'll get 25 to 35% of their payment for the first month. And that can add up pretty quick. We've had some referrers of Santiment that have made, I think, thousands of dollars over the past few months, if not the last couple of years. So keep that in mind. It's a great way to help spread the word about our data while growing your community by sharing Santiment stuff and making money along the way. So keep that in mind. And any final words for us, Clay?
No, dude, I'm just amazed by y'all's platform, honestly. And the discounts that you guys offer for holding some of your sand tokens, and then also having a free account for providing liquidity. You guys are doing it right.
Thanks, brother.
Taking a look at everything. So I just found out about that yesterday, by the way, and I decided to provide liquidity, and I'm super stoked about that.
That's awesome. Yeah. And all credit to our founder, Maxim, who couldn't join us today, but we really have a solid system as far as how those SAN tokens work, where regardless of the price of SAN, as long as it's at $1 or under, SAN tokens are always worth $1. And if and when it goes above $1, SAN tokens will still provide discounts where it would never exceed, or the paying with dollars would never be a better deal than paying with SAN tokens. So right now, I can't remember the exact price. It's like between 12 or 10 to 15 cents. So if you pay with SAN, it's always worth $1. So if it's worth 10 cents right now, you're getting a 10x value by purchasing anything related to Santiment with the payment of SAN tokens, if that makes sense. So if you didn't know that, now you do, and it's a really sweet deal that you can benefit from pretty greatly. And of course, you can also, I haven't brought this up in a while, but our SANR.app mock trading platform, that's all being driven by SAN tokens as well. You can see here on our 17th epoch, we have 45 different unique participants that are putting up mock trades, making almost 500 signals just in this 2-week session. And in a little under 11 days, we're going to be rewarding the winner with 3,400 SAN, which I really should know the price of SAN token right now. Let me look it up. 3,400 SAN tokens. Oh, it's way below 10 cents now. Holy cow. So it's about 6.8 cents at the moment. So if we do, what would it be? 3,400 times 0.068. Yeah, so you'd be getting about $231 just for making free predictions on SANR and being the most successful out of these 45 participants. So as far as risk reward goes, it doesn't get much better than making free trades and being rewarded upwards of $230 for making educated trades that put you at the top of the leaderboard. But yeah, thanks for bringing that up, Clay. And once again, thanks for joining. It was an absolute pleasure, and you're definitely invited on here anytime. I think we should do it again a couple more times before the end of the year, and we'll be in touch, okay?
Thank you for having me. I really do appreciate it.
Yeah, man. Enjoy your trading and your weekend in the meantime. And to all of you who've been watching, thanks for tuning in. Stay safe and warm. And let's see how the rest of this quarter goes. Fingers crossed that it's some positive news comes out and we start to rebound and get back to some of the price levels we were seeing at the end of 2021. All right. Cheers, guys.